Hello, this is Ogbu. Welcome to Volatility Trader. Today, I'll be talking about how you can combine your support and resistance with other trading tools. If you've not watched my previous video, the video I made last week where I talked about support and resistance in generally, click on the link in the top description and watch the video, okay? Because if you don't watch that video, you might not get everything I'm going to say here. Today is going to be a very brief video.
Like, comment, and subscribe.
You might have watched the part one of this video. So today I want to talk about how you can combine your support and resistance with these tools which I am going to talk about now. So the first indicator you're going to add here is what we call your moving average. How do you add your moving average? All you just need to do is to go to your insert, you click on indicator, you go to trend, you select your moving average. Make this 10, moving average 10, then method simple. You can change the color to any color of your choice, and of course that will be all. Click OK. So you have something like this. This is your moving average. So the next indicator you're going to add here is your MACD. You click on insert again, click on indicator, go to oscillator, your MACD. Please do not alter your MACD. Leave it the way it is. You can change the color if you wish, but leave the parameters the way it is. How do you use these tools? How do you combine these tools with your support and resistance? Remember, I said in my previous video that you must go to your H4. And of course, if you watch my previous video, you shouldn't be asking me how we came about this. I explained everything in my previous video. So I would expect you to go to my previous video and watch it. If you've not watched it, click on the link above and watch it. Okay, watching that previous video will help you to understand how this thing works. What are we expected to do from here? Remember, this is called our resistance and this is called our support. This is a support in this case, this is a resistance in this case, and this is a resistance. And if by chance this zone is broken, automatically this will no longer be a resistance. It automatically becomes a support. I don't know if you understand what I'm trying to say. This is a resistance at this point, right? But since it could not be broken, you can see that the candles tested it, but it could not break through it. So at this point, you can call this a support, and this becomes a resistance. I don't know if it's making sense to you. This is a support, right? Because the candle have tested it, but it could not break it, and it started coming down, right? How do we actually trade with this? It depends on you and what you want. But looking at this very well now, you can see that candles are trending below the moving average. And the function of the moving average is to define trend. When the candles are trending below it, we'll say this is a sell trend. And when the candles are trending above the moving average, we'll say that this is a buy trend. But that's not all. You must take other things into consideration before placing either a buy trade or a sell trade. And this is where the MACD comes to play. If you have been following me closely, you know that I have talked about MACD several times. For those of you who have been following me, the function of the MACD is to define trend as well. When the MACD is trending downward, it's indicating a down signal or a sell signal, and when it's trending upward, it's indicating an upward trend. So for you to take a trade now, the following conditions must be met. 1, your MACD must be trending upward. 2, the candle must have broken a particular zone. 3, it must have broken the moving average. Let me explain. Number 1 condition. Remember I said your MACD must be pointing upward. Secondly, you can see in this case, the candles tested this zone and it could not break this zone. And of course, the trend reversed. This is an indication of upward trend, right? But this is not enough. At this point that the candle closed bullish, it's not enough for you to trigger a buy trade. You must wait for it to close above the moving average. So once it closes above the moving average, you are free to take trade here as a buy. And once you take trade as a buy, your TP should be your resistance level, which in this case is at this point. Your TP should be at the tip of the resistance level, and your stop loss should be below your resistance level. Do you understand? Which in this case is below this zone. Your TP should be here and your stop loss should be below your resistance zone. Those are the conditions that must be met for you to take what? A buy trade. And for you to take a sell trade, the following conditions must be met. Okay, let's say by chance, just like what happened here, the candle closed above this zone after you must have taken your profit here, right? The candle closed above this zone. Remember, I told you that once this zone has been broken, it's no longer a resistance. It becomes what? A support. Of course, at this point, this is already a support. And if at this point, the candle is still trending above the moving average, and of course, your MACD is still pointing upward. What are you going to do again? Place another trade as a buy. And once you place another trade as a buy, your stop loss should be below this zone and your TP should be at the next resistance. Because since this resistance has been broken and it becomes a support, automatically another resistance is going to form above. Those are the conditions for you to take buy. And for you to take a sell, the following conditions must be met. One, your MACD must be pointing downward. If your MACD is pointing downward, then just like what happened here, this candle tested this resistance and it could not break it upward and it started reversing. Okay, that is an indication that the trend is about to change. On that note, do not trigger your sell yet. Despite that at this point that your MACD is pointing downward, do not trigger a sell trade. Wait for it to close below your moving average. So if at this point your bearish candle closed below your moving average, your MACD is pointing downward, just like what we see here, you are free to place a trade as a sell. And once you place a trade as a sell, your stop loss should be above this zone and your TP should be here. That's all you need to know. Please, for you to get the detail of this video, go and watch my previous video, part 1 of this video. Click the link above. It will take you to the previous video. It will explain to you how we came about this. If you have any question, do well to comment it in the comment section. I will do well to see how to. If I can reply you there, I will reply you. But if it needs that I will make another video to explain it better, I will do that. So your reaction will depend if I'm going to make another video to explain or not. Do not forget to like, share, and subscribe to our YouTube channel. That's the only way you can get notified. Moreover, we post video every 6 p.m. on Mondays. So expect our videos every 6 p.m. on Mondays. See you in my next video.